We are doing our Q&A today again. The questions that we've had this week rolling in, we'll jump right in. We're a little bit late today because we were on the Cromford Report with Tina Tambor, which is our local mathematicians and economists, and all they do is track the real estate market here locally. So it's incredibly powerful to the extent that they get into the numbers. So we've got a few things about that stuff to share with you, and then the questions that we've gotten this week have kind of been on new builds. So we've had some confusion when we start talking about percentages and down payments. First, like a concession percentage that you would get from the owner, builder, seller, whatever you want to call that. So your down payment percentage, a typical conventional loan can go anywhere between 5 and 20% down, and that's going to be on the loan side, the amount that you're paying for your house. Then there are fees that go with buying a house, fees to get a loan, so they go to your lender, fees to do the title search and change the name on the house on the deed, those go to your title agent. There's homeowners insurance costs, there's HOA costs, there's real estate property tax costs, there's some commissions depending on how you guys have that lined out. But basically all of that happens at the title table, and those are what we refer to as your closing costs. So there are two separate things going on here. So when a seller is talking about crediting you money towards your closing costs, it's going to pay for all of the extras. It's not going to be changing your down payment amount that you're bringing in to buy that house. So if somebody, we just got one at a new build, for example, that's 5% in concessions, that's all going to go into buying rates down, covering title insurance, covering lender fees, doing all of that stuff. And they're still bringing in the full 20% for their down payment. What else can I share about that? Does anybody have any questions on how that kind of plays out? Just drop a message in on either YouTube or Facebook, either one. Shoot me a text, whatever. What was the other question? The other question that we had is on wholesale deals. How do wholesalers work? So when you're a real estate wholesaler, what you're trying to do is get a contract that you're going to basically sell the paper. That's what they say, sell the paper. So you're going to take the contract that you've gotten negotiated with a seller, and you're going to take that contract and try to give it to a different buyer. You're going to upsell it. So say you have a deal at $500,000 to buy a house. You're going to turn around and list that to your investor pool at 520 or 5, whatever that markup is. And you're going to go and sell that paper for 520,000 as like a gimme deal, right? So that's what a wholesaler does. So they're going to go out and try to get the absolute lowest deal that they can get so that they can still either mark up and have those numbers make sense for the end investor buyer. So some of that can get a little bit confusing. It's a little bit tricky. If you want to get into wholesaling or see what wholesale deals look like, let me know. I'm happy to share. I get hundreds of them every day, it feels like. So some of the other things that we've been asked lately are loan limits, because those have been changing. So the FHA one in particular is $530,000. They've increased conventional loan limits up to, I believe it's $750,000, but I'll double check on that one. So anything, if you're financing anything over $750,000, you're now into a jumbo loan. And jumbo loan, fun fact, you have to have 12 months reserves to be able to get that jumbo loan. So it's not just the 10 or 20% down, it's 10 or 20% down on that jumbo loan plus 12 months of that payment to be able to qualify. So it's a little bit limiting there. So keep that in mind if you're looking at jumbo. The fun part about jumbo, though, is you're quite a bit cheaper than a traditional conventional rate. So right now, a conventional rate, 30-year fixed, is 6.78, and a jumbo is 6.25, so 6.25. So you save about 0.5% if you choose between those two products. So kind of an interesting game to play and to run some of those scenarios. The stuff that I said I would share from Tina from the Cromford Report is our market is kind of lining up a lot, and we've been talking about this for a while, but our market is lining up to be similar numbers-wise, feel-wise, experience-wise to something like 2015 or maybe even 2019. So what that means is that's where our contract ratios are similar. That's a ratio between the homes that are actively for sale and the ones that have a pending contract on it. So that's basically like the speed or competitiveness of our market. So that's looking the same. The other cool part at the moment is that our investor ratios have gone from 26% down to 16. So 10% of the investors have left the market, which means that we're getting a lot more owner-occupied buyers into the homes that they actually want. So it's less competition. You don't have those guys driving up the price. You don't have to play with all those cash, whatever. You have a lot better chance of getting the house that you want with a deal that you're comfortable with. So that's really exciting. So 63% owner occupied last year. We're up to 75%. So really cool. The inflation numbers, we just had that other jobs report released. Not a super exciting picture as far as the interest rates go, because it was way too strong. It was stronger than was expected. That in the PCE, which is it's similar to a CPI, but it gives more weight to, or less weight to some, I don't remember. Anyway, Google it. It's different than a PCI. The CPE is what everybody is really, really focused on. That should be released on the 24th, the next monthly, and it's a lagging thing. So I can't remember if they're 1 or 2 months behind. Maybe they're just January numbers on the 24th. But anyway, they are looking pretty flat and steady. And so if they're flat and steady again, we might be hitting where we need to hit March to May. So if we can hit that, then we'll see a lot less pressure on rates, and those are expected to come down. So we shall see if that happens. You just never know. And then fun fact, Opendoor, who's one of our big iBuyers in the market here, they're one of the cash offer people. They went from 700 Opendoor acquisitions last year, like over the summer, down to just 97 last month. That's a huge, huge jump. So the 97 they're buying are really smoking good deals. So if you're still thinking like the cash offer is the way to go, those offers are really, really nowhere close to market value. So they're still filling a need for those that really, truly need convenience. But you're letting go a ton of equity, not just like the 5 or 10% that we had been seeing, like ton of equity, like 20 to 25%. Rental prices are up on average from 2,200 to 2,245, and they've kind of stayed steady here over the year. So that's kind of interesting to know that they've stopped. They had been declining a little bit there, but they've kind of stopped, and they're back to steady. As far as that stuff goes, we had some investors asking about rental rates this week. In the Southeast Valley, those rates are going to be a lot higher generally than the West Side. Of course, Scottsdale, Cave Creek, Paradise Valley, those rates are even higher. So it's all just very localized numbers. So if you have questions, let me know, and I'm happy to share whatever we got going on. So what other questions do we have? And if nobody's got anything that's going to chime in here that we need to elaborate on, then we may be done a little bit early today. Did I miss anything, Morgan?
I don't think so. I'm over here looking up the tracking for the month. So market updates coming.
Okay, market updates coming. So if you want to know what city prices, all that stuff, check back on our Facebook page. She'll have those posted in the next day or so. Any other questions, of course, give us a call, 480-518-9907. Shoot me an email, Chelsea@yourreddoorteamaz, like Arizona.com. Happy to answer those for next week, and we will see you guys soon.